Jumping back into the cryptoverse. Today, we're going to talk about Bitcoin and we're going to be discussing the social risk. If you guys like the content, make sure you subscribe to the channel, give the video a thumbs up, and also check out the sale on Into the Cryptoverse Premium at intothecryptoverse.com, where you can, of course, get access to the charts that we'll be talking about in this video on the Into the Cryptoverse website. We recently spoke about price risk for Bitcoin, which is based on nothing more than historical Bitcoin price movements. But in this video, we're going to be looking at a different risk metric, which is called the social risk. And the social risk is a good indicator to help us better identify if retail is interested in crypto or if they are not. Now, this risk metric right here is made up of 5 different parts. It's made up of YouTube subscribers to various crypto YouTube channels, YouTube views to various crypto YouTube channels, new followers to various cryptocurrency analysts on Twitter or X, followers to exchanges on X, and new followers to layer 1s on X. And when you show all of these, you get something that looks like that. And the general idea is that if we average those out, then we get something that looks like this. Now, to break these down into their constituent parts, I just want to take a brief look at maybe 1 or 2 of them. For instance, if you were to look at YouTube views, these are views to various cryptocurrency YouTube channels, you can see that there is a fairly low social interest in crypto back in 2019, even during the parabolic rally by Bitcoin. Now, there was some increase in social activity. You can see that these channels here went from averaging around 20 to 30,000 views a day, all the way up to about 114,000 a day. So we did see about a 4x move in views over that time period. However, it quickly faded once the Bitcoin rally was over. In 2020, you will notice that really YouTube views did not really start to pick up until after Bitcoin broke new all-time highs and continued that rally for several months, where altcoins started to durably gain against Bitcoin. And so one of the things I've been talking about for a long time is the rally more like 2020, where we break new all-time highs under low interest rates and QE, or is it more like 2019, where we didn't break new all-time highs back then, but it was during high interest rates and QT, quantitative tightening? And I ultimately think the answer to that question is that it's a combination of both. Because in 2019, we also saw social activity go up about 4x or so before dying off after the rally was over. But that rally did not see new all-time highs. This rally has seen new all-time highs, more similar to, say, 2020 and 2017. So it seems to me like it's a combination of the two. Now, the reason why following this is interesting for a lot of different people that are interested in crypto is because it helps us identify if a real alt season is going to occur or if the altcoins will just simply bleed back to the king, Bitcoin. When social activity picks up like this, like it did in December of 2020, that is precisely where the dominance of Bitcoin went down a lot. But it was only as retail continued to come in and continued to lift prices of the altcoin market. In 2019, we saw increase in social activity, but as soon as the Bitcoin highs were in, social activity fell off a cliff. To look at a few other things, we could look at Twitter or X. So this is new followers to various analysts on Twitter. And there has been a bit of a surge recently, although it is starting to come back in. And so this, I think, is one of the most important things to look at over the next couple of months or so, because I think it will help us identify whether any of these trends that we've seen in alt Bitcoin pairs will durably change, or if they won't, and Bitcoin dominance continues to go up. Going back to YouTube views, you can see that there has been a spike recently, and we sort of hit some lows over here at around 400,000 views a day, and now they've gone up to a little over 1 million views a day. If you were to break this down into, say, a 3-day, you can see there was a big spike right around the time that Bitcoin hit new all-time highs, where these channels were averaging a little over 1 million, about 1.25 million views a day. It has fallen back in a little bit here as Bitcoin, continues to just sort of basically stay near the same prices, and people aren't tuning in as much as they were a week ago, but social activity is still somewhat elevated. And so when we go and look at something like the social risk, we must understand, first of all, that from one cycle to another, the base should be higher, right? Yes, at various points, crypto can get boring, but the general expectation would be from one cycle to another, there is an increase in people who just stick around no matter what. And so that is already baked into the social risk. Now, in 2019, you can see that ultimately the social risk topped out somewhere between 0.3 to 0.4 risk. And it was unable to durably go beyond the 0.3 to 0.4 risk band. We once again find ourselves in the 0.3 to 0.4 risk band. And so I do think that this metric will be instrumental in terms of understanding Bitcoin, not only Bitcoin USD, but more importantly, alt Bitcoin pairs, right? Alt Bitcoin pairs. Because again, there's no denying the fact that if you were to go look at, say, a heat map of alt Bitcoin pairs over the last year, most of them have underperformed Bitcoin, right? Most of the altcoins have bled to Bitcoin over the last year or so. You can see that 155 of the top 200 have ultimately bled back to Bitcoin. And so a lot of people have sort of speculated on, well, is that going to change? And I've seen a lot of people say, well, like in 6 months, this chart will look completely different. And that could be true. But I ultimately think it comes back down to whether retail comes back in mass or do they not, right? And I do think that's ultimately what it boils down to. And look, right now, we're still at levels that we've seen in the 2019 rally and also late 2020, right? Like Q3 of 2020. Like these are not, the social interest right now is not what it was in 2021. It's just not. And it can feel like it sometimes, but it's not. And to give you an idea, like in 2021, a lot of channels were getting like 100,000 new subscribers a month. Most of these channels are nowhere close to that right now. So there's not as much social interest in crypto right now compared to 2021. The main question that's worth thinking about is, will it go back up to that level, or will it, do something like over here where it fades for a little bit and then durably goes up again as QE returns? And again, it's hard to know the answer to that question, but one thing to think about, if you go over and look at, say, like the Bitcoin dominance, this is Bitcoin dominance without stablecoins, and you were to overlay the social risk, one of the things you'll notice is that as the social risk goes down and stays at low levels, the Bitcoin dominance goes up, right? So it went down, and even though it had a rally here, it still stayed at low levels. And during that time, dominance of Bitcoin continued to go up, even though there was over a 300% rally by Bitcoin. Here, we've seen dominance continue to go up since May of 2021, and social interest has been in a downtrend, a spike up recently. But the biggest question to ask ourselves again is it like this, where it fades, let's say following the halving? Or is it like this, where a lot of retail is on the way? And It's not an easy question to answer because in terms of monetary policy, we are more similar to 2019 in terms of high interest rates and quantitative tightening. I'll just show you guys the same stuff that we've been talking about forever. So in terms of the balance sheet of the Federal Reserve, QT, and ultimately, you can see that social interest did not continue whenever the local top for Bitcoin was in. And also, interest rates were high, right? During a Fed pause, right? Over here, this rally was during a period where interest rates were basically back at the low bound. And so in terms of monetary policy, we are much more similar to 2019 than late 2020. And I think that's the reason why Bitcoin dominance continues, has been in this uptrend, right? Is because of monetary policy being where it's at. If monetary policy were not where it's at, you might see something like this, right? Where Bitcoin dominance is in a downtrend, right? This was after the Fed pivoted right there. And so I think that is sort of what a lot of people should think about, is that monetary policy shows us that all Bitcoin pairs are bleeding and that Bitcoin is taking that liquidity and using that as fuel. And so that has ultimately led to new highs, unlike 2019. And so I was always curious, what would happen if you had a QT high interest rate environment where Bitcoin rallied, but it actually took out the highs, which is different than 2019. The reason why that's important is because, again, in 2020, when we took out the highs, that is ultimately when social interests started to come back into the cryptoverse, right? Once we took out the highs, and you can see over here, we have taken out the highs. So going back to the social risk, you can see that as Bitcoin took out the highs, there has been a surge in the social risk back up to the 0.3 to 0.4 risk band. Does this continue, or does it fade like 2019? And I think that is worthwhile to follow. And you can follow it on some lower time frames, of course, right? You could always go over to the YouTube views and see, how is it, what is it doing on a daily time frame? Is it going up? Is it going down? You can see there was a spike here when we hit new highs. Recently, it's sort of dropped back down to sort of background levels. So again, is that sustainable or is it not? Now, my view, as I've made clear for forever, for the last 2.5 years, my base case is that Bitcoin dominance continues to go up. And so because of that, whenever I see altcoins rallying against Bitcoin in the short term, to me, that just means that liquidity will eventually go back over to Bitcoin, right? And, that's ultimately led to new all-time highs. But the reason I assume that's my base case is because of monetary policy. If monetary policy were different, then when you say look at a heat map, then you might expect a lot of altcoins to outperform Bitcoin, especially after a Bitcoin parabolic rally to new all-time highs. But again, we're still not seeing that. Now, some people might say, well, you haven't seen it just because it hasn't happened yet, and it's just around the corner. But I continue to look at sort of, what Bitcoin USD is doing and Bitcoin dominance. And I say, despite all the proclamations that dominance is not looking great, it's basically just spending a lot more time up here at the highs, and makes me think that eventually it's just going to break out as altcoins bleed back to Bitcoin. And so if I were to change that view at some point, I think I would need to see looser monetary policy, lower rates, or to see a durable change in the social risk. the social interest and not just sort of like a one-off day, a couple of days where you get a spike where you get 2 million views, right? 2.5 million views, 2 million views there, only to return back down to background levels. So what's going to happen? Look at YouTube subscribers. We've seen a surge there recently as well. No doubt about it, right? There's definitely been a surge. Look at it on the daily time frame, right? A surge right around the time that Bitcoin hit new highs. It has fallen back in a little bit though, to sort of some background levels. So will this continue or will it not? And that's kind of, I think, what everyone should be focused on, and I know that if you're new here, it's easy, right? It's certainly easy to sort of dismiss all Bitcoin pairs and Bitcoin dominance and all that stuff. But there is this reality that Bitcoin is dragging the altcoin market up with it, not the other way around, right? So Bitcoin is leading, and I've always said that, right? Like Bitcoin would lead any type of bull market, and that altcoins can hitch along for the ride, but it's Bitcoin that leads it. And so that, I think, is what we're ultimately seeing. And I do expect a big breakout by dominance, probably within the next month or so. I mean, it might not occur, today, but it could occur, later this month. It very well could just occur in April during the halving. I've said before, this is very much sort of a narrative-driven market. And just like the ETH Bitcoin valuation rallied into the merge, I suspect that maybe Bitcoin dominance rallies into the halving. And the halving is just over a month away. So I would say, look, with social risk, I think continuing to follow that and see what it does could provide insight into the likely outcome of those alt Bitcoin pairs. Is social risk just starting to roll over again, like all these other peaks, and like 2019, where it just goes back to Bitcoin? Or is it going to do something like this, like 2020, where it rolls over and then spikes up, right? That's ultimately the question to think about. And I think that by looking at the social risk, that should help answer that question over the coming weeks. Again, my base case is that dominance goes up as people go, recognize the relative value of Bitcoin against the other different cryptocurrencies. But I could be wrong about that. That's just been my view for a while, and we will see if it continues to play out like that. I mean, right now Bitcoin is around $73,000, dominance just below 54%. Seems like there's a crescendo here of a lot of different things that we've talked about in a lot of prior videos. So we'll see if it continues to reach that crescendo into the halving, and I will continue to follow the social risk to see if it follows the 2019 move or if it follows, say, a late 2020 move. Again, evidence for both cases. 2019, more similar in terms of monetary policy. 2020, more similar in terms of the fact that we actually hit a new all-time high, unlike 2019. My guess, it's a combination of both. That's my guess. I think you're probably not going to see social risk, immediately